Good morning, good afternoon, good evening. Hey, we're going to get to another video here. Another wonderful session. I thought I'd just show my face right now a little bit bigger, but let's get to the charts. Here's going to be my day, my session today, closing out Friday, quite healthy, right? I want to go over these trades and just explain exactly how I read the market, how you can read the market in the exact same fashion, and just kind of go over price today, explain it, um, and do it the best I can, so that you can improve your trading, so that you can improve your edge, and see some more consistent wins. Right? That's the goal. And I'm talking to a few people right now. And the few people that I'm talking to are quite amazing people, and I really want them to succeed. So if I can share some value, might as well record it and share it to others as well. If you have any questions, put them in the comments. Message me on Instagram, devin.ftp sorry, devin.fbt. And I'm happy to get back to you as soon as I can. So let's go over today. It's going to be it's going to be Friday, right? On this, I don't know when you're watching this, but this is going to be Friday. Price action on NQ or Nasdaq futures. Right. I have two charts always on my screen. One's kind of just a higher time frame perspective. Just kind of gets me out of my head sometimes, and just looking at the overall picture. Right. Because if you watched my previous video, um, or videos, any video that I've had I think a few hundred videos on YouTube. I deleted them a while ago just because I finished teaching and coaching. But so far, market structure's going bullish, right? We're expecting the highs to break and the lows to be maintained, right? If price comes down here, excuse me, if price comes down here, takes out this low, right? I'm expecting this high to be maintained because the sellers are more in control of the buyers. If the sellers here are showing weakness, what we'll actually get is price coming back. We'll get the sellers come back in, and then the buyers will come back in, and you'll sometimes see price action like this. Some people call this a channel. Some people, you can call it a bear flag, whatever you want to call it, right? But as we're pushing down like this, right, we can see some sort of movement that same thing again, internal to these points. It kind of like traps the sellers and then goes bullish here. So now it's like, okay, the sellers didn't want it from here. Maybe they wanted a little bit higher. Oh, excuse me. But overall, it seems like this level here is weak. And so as price pushes up here, some people draw order blocks. Same thing as before, right? They'll look for a short trade here, put their stops here. Price will do this and then maybe go down in their direction, right? They're stopped out and everybody is kind of pissed off. But the larger players got in and out when they wanted to. All right. So what I'm trying to do is I'm trying to look at the current movement. And if it shows that price is going up here, right, I'm not looking for shorts. I would look for shorts if price folded over after reaching this level here and started pushing down. And then I'm looking for my shorts because it goes back to that whole statement, right? If we're making bear bullish structure and breaking it, if price does this and then starts pushing up, I'm looking to get in and out. I'm looking to take my cheese, so to speak, my profit here, right? Or even a little bit higher. The higher you go, the less likely you are to get smooth price action, right? Sometimes it comes up here and then gives you a nice big pullback from the extreme and then pushes. But overall, I'm looking to wait for price to fold over in a trending direction and then get in and out quick, get my money and move on. And so I thought I did a quite a nice job today, right? And this is going to be a New York session. This is when I get to the chart. So at the start of this box here. So that's going to be my open. Prior to that, you can see that we're kind of ranging, right? Price dropped very, very quickly, made people think we're going short. Price reverses and then heads up very, very quickly with high momentum. There's really no, like, the lows are just getting held, right? They're just holding all the way up. New York opens, we have a massive push to the upside. What do we look for? Well, we look for price to take out a certain high or low before reversing, right? Market structure. Once it takes out a previous high here, right, this is the better times to look for a counter trend trade. It's more risky, but it's still counter trend, right? Price pulls back. I'm expecting price to go like this and make a new high. So going into today, we push to the upside. I'm looking to the left and I'm looking for at pivot points. And so we have London, we have a high here, we have a high here, price just drops. So we can draw those out. Those are pretty much at the exact same spot. And then the high here. Look what happens after you take out those 2 points. It takes it out, pulls back, continues to the next level. Takes it out, reversal, right? Reversal here. I'm not shorting at the high here. I'm looking for signs of reversal, which would be high, low, high, drop, push up here, attempt the high with a small wick, and then price dropping down. I entered here. And what I did was I looked at the bullish move. Price loves to come back to certain Fibonacci ratios. That's why Fibonacci's sometimes works. But the theory is price loves to come back to the 50% of impulsive pushes. So price pushed up, right? Started pushing down. I entered somewhere here, caught the momentum. I got a little bit more aggressive with my stop loss on the way down once it reached the 382. And 618 is just the inverse of 382. It's pretty much the exact same spot, but that's the zone where price is more like balanced. So we can see price reverse anywhere inside there. Price pushed down, pulled up a little bit, pushed down, hit the 50%. And just as it broke, I exited, right? Perfect. Wow, it's exactly my level. I knew what the market was doing. I'm a wizard. No, it's just probability. Right. So luckily this instance worked out great for me. I exited the trade. Then we got price push up, push down, right? So sellers are here, push price down, goes up, sell off again. It does not break the low, right? It comes up. We actually have a bullish candle closure. And so my candles are a little bit different color, so hopefully you can bear with me. But these ones here are going to be my bullish ones, the hollow ones, and then the white ones are bearish. So bullish move, bearish move here, and then a bullish close. If you're looking for the reversal, right? Sometimes this is like that W pattern, but this is like the start of the W, so you're kind of anticipating it to fail. You could essentially take that entry, put your stops below the low here, and then watch for a price reverse. Going pro trend, this is a little bit more likely. Going counter trend, it's not, right? Just know that. Take your profits early and very safely when you're going counter to the overall trend, because you don't know how far it's going to go. And then price pushes up here. It takes out this previous high. So from this level here, or this area, right? Price push down, up, down, up. Now the sellers can come in at any point in this area here. Price pushes quite aggressively, pulls back a little bit because it reached higher. It pulled back and then kind of like shot up again, right? As it shot up, I entered, covered the little bit of like a bounce, same thing, the engulfing, right? And now what am I doing? Well, I can target this high here, but because from the past we took out the London high to the left, I want to see what's up top here to target the next level, not just this high, right? This is a very intelligent high and price could reverse after that. So you have to be managing that trade. But what I did was I went to the higher time frame just to be able to zoom out a little bit easier and look for those pivot points. And so what I did was here's going to be London high, and then here's highest price where the price went to today. Go to your left and then look at the pivot points that could be broken. Here's one, here's two, and then this one here is just a little bit below this, and then there's one here as well. So there's going to be my 3 levels, but this next one does not get hit, right? So we can delete that, go back to the lower time frame, and then just target those levels, right? Price pushes up, pulls back a little bit, starts pushing up again. And look, this one candle reached it and then reversed on a dime. So if you did not enter, or as price was pushing up here, you entered, once it breaks the level, expect a pullback. Once it breaks a level, expect a pullback. Once it breaks a level, expect a pullback, right? Go over that in your head constantly, because it happens all the time, because if structures not necessarily like on the time frame you're looking at, you might not be analyzing the chart properly, and those little pullbacks here could come in quite violent. Like this candle here is from there to here to this low is almost 50 points. So if you're doing two, three, four contracts, that's a big pullback. It might make you nervous. You might exit the trade, and then it goes on to take your to continue. So that's a little bit sad. So that was one of the trades I took. All right, I exited a little bit higher here. Price pulled back, and then sorry, I exited one contract here. Price pulled back, and as it took out this previous low here and then reversed, I scaled in. So now this trade was in one position. I scaled into two. My stop loss was here, catching the momentum, and now I'm targeting the next level, right? But same thing before is I like to target just above or below the levels because, price does like to take them out and go a little bit more. It kind of reaches. So what I did was a little bit higher. I allowed price to pull back a little bit. I was cautious right here, and then it went up and hit my take profit. And I was just done for that area, right? I'm done. I need to watch for a pullback. I'm watching for that same fold over again. Same thing over and over and over. I did not catch a trade and hold it to this level, right? Or sorry, the level that was like up here. I didn't hold it there. If I would have held this trade higher, I would have told myself, hey, it took out a high. We did have a reversal, but then price went up a little bit. And then now it's making a high, low, high, low. It pushes with momentum. Here it takes out these previous high and then dies off. It dumps very, very quickly. Price action is showing us, hey, sellers, there's some sort of wall here, and I'm waiting to get back in to see if these sellers are still here. And you can see price pushes up, down, up. Sellers are still here. Price pushes up, takes out this previous with one attempt, fail, tries it again, and then fails right here. This is a very safe spot to take a short because we're seeing the attempt of the buyers to fail. Sellers are coming in, profit taking, people exiting their trades. It could be anything just like that, right? All the reasons why you think trades going in a certain direction is probably true. We never know exactly what's going on because it's just you don't know what people are going to do, or big institutions. Essentially, you can just say, if you look at this big move here from the low to the high, it's almost 300 points. This is like, if you were to catch, if your goal in trading is to catch 20 points a day, 20 points a day will make you rich. I'm just saying 20 points a day. You don't need to catch 150 or 200 and 300, 500 points. 20 points will make you rich. Because if you can consistently trade profitably and you can follow your plan without errors, right, you can then scale. And so instead of taking, $20 for a $20 or 20-point move, now you're taking 400. And then once you get 400 and you consistently grow your bankroll and you get consistency, you gain confidence in the strategy and you remove your errors, right? Then all of a sudden you add a zero or add two zeros. And now that one trade is now worth 40,000. So 20 points could be worth $40,000. It adds up very, very quickly. And so what we're trying to do here is we're not trying to like get in a trade here, then take another trade, then get in a 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 trade. I do that because I'm rotating my accounts. I felt like my psychology was getting a little bit affected when I was copy trading the accounts together. I felt like it was like a small amount of drawdown would negatively affect my trade, and I couldn't see the market as well. So now I'm just taking trades. I lock out the account, go to the next one. Take the trades, lock out the account, go to the next one. It works for me. Maybe one day I'll trade it back in for copying accounts, but so far I'm happy with it. And so price was pushing up. It attempted the high, failed. As it's pushing down here, right? It bounced, and as it reversed here, I entered. Stops just a little bit above this high here. It closed it engulfing, which made me a bit more confident. And now I was analyzing the market and saying, hey, the kill zone actually got taken out the high here. Just like before, the low is important, the high is important, and the hypothetical 50% is important. So when I saw that push down there and I felt confident about it, right? I marked out the high and low of the kill zone. Oh, look at that drawing. Perfect at the 50. That was exciting. That made me excited. All right, so that's gonna be my analysis for this little section, right? And I targeted the 50%. Once it hits the 50, expect a pullback because a lot of traders are looking at that level there, right? Right next to it is another, you can see this is a pivot low. So not only did it target the 50, I was reaching a little bit further. Once it broke it, right, I exited a lot of this trade, right? I think I had two contracts in this. Yeah, two contracts on this one because this was 12, 20, no, 1200. No, this was one contract. Oh, what did I do? Oh, maybe I took another trade. I'm not too sure. I have it on other screenshots as the days progressing. I just take the trades while I'm like in the trades or take a screenshot of the trades. But as price was pushing down, right, it reversed here and then started dropping from here. So I was talking to a guy on WhatsApp and he said, "Hey, help me try to get a trade." What I'm noticing is you can see here, buyers came in here, buyers came in here, buyers came in here, buyers came in here, right? These are the engulfings on the way up from the low to the high. This is going to be going into like slightly another lesson. But an old mentor of mine used to call them catalyst for pullback, CPBs, right? That's from the old days of Phantom. Um, the concept works, it makes sense. And so as price is pushing up, right? Pulling back, pushing up, pulling back, pushing up, right? If we zoom in, you'll see price push up and do something like this. Makes a high, right? Breaks, comes down, breaks, comes down, breaks, pushes up, fails, goes up, down, and then continues like this, right? So you're like, all right, there's no real pattern in this at all unless you look a little bit deeper. We have buyers coming in. We have the zone here. All right, let me, here we go. Oops. All right, let me draw these zones. All right, these zones from the past, right, become bounce areas for price once it breaks a previous low. You can see it makes bullish structure. Now it's making bearish structure. Well, we get the pullback and then the break and a pullback and a break. And then now we're getting the break here and a break here. We continue it to the upside. Now we're getting break here, break here. So if I draw out this high to low, right, once it gets broken, right, this high to low gets broken, right? So on the way up, we're making kind of like bullish order flow, order blocks, whatever you call them, right? Engulfings. As price comes down, now we react to a previous zone. We have a reaction. And if the reaction folds over here, right, I can look for shorts, but I can also target this zone to the past, just like I did in the earlier session or earlier in the video where I was targeting London and the pivots. Now we have a reaction. The reaction folds over. I target this zone, right? We have a reaction here. I'm waiting for the fold over, and then I can look to target this level. The fold over fails. We go up. Now I can target a high, right? And it does the exact same thing in the opposite direction. So if I look at this, and you can see that these are going to be bearish reactionary zones. Now, what I actually get is this to this, right? Reaction, failure. Pulls back. Where does it reacting from? Well, it's reacting from this zone. Then the next one, because we've already had this high here, if I just go above and I go into the future, look, reaction, failure, fold over, entry. Reaction, failure, fold over, entry. So if I look at current price today and I say there's a little bit of a bounce here. There's a zone here. There's a zone here. Right? This one's reacting. This one's reacting to this previous zone. All right, we have a zone here. Watch how this just absolutely it should blow your mind. It's pretty cool. Yeah, let's draw. I want a little circle. Where's the circles? Here we go. All right. So we have reaction, second reaction, failure. Oh, look what it reacts to. Oh, it reacts to another zone. Comes down. Look what it reacts to. Another zone. Look what it reacts to. Another zone. Right. And you can see that here's an engulfing. Right. Reaction, failure of this zone. What is it reacting to now? Well, it's reacting to the remainder of this wick there. Reaction, fold over, look for trades, right? Going down. This is a lower time frame, so it's you have to go smaller than this time frame. But you can see once we react, have the pushback or the fold over, right? After pullback, look for shorts. Here, fold over, shorts. Here, fold over, shorts. Here, fold over, shorts. And now when I'm taking these trades, I'm not only targeting these levels here, I can look to the left and target these ones. So the trade that I helped him out, I tried to get him in this short here to target this low. Once we had the reaction right here, I said, what's the next level that we're going to be looking at? Well, we're looking at this one here and then these ones here. So on the way down, right, because we've reacted to that level, on the way down, I just said enter trade, target just below this level, right? Stops at a certain point, and there's your trade. So, like I said, if you're targeting 20 points, there's 20 points, right? It's going to be 80 and let's do 80 and 120, right? Practice when you're practicing, I would love for you to increase your stop loss, right? The number one reason I believe, actually two, the top two reasons why I think traders fail and can't build consistency is they don't have enough money and they're trying to be greedy, right? Greed and impatience is a big thing. So if you have $1,000 to your name and you're trying to live off that, well, you need to make $1,000 pretty much a week. And so you're making 100% on your money every single week, which is just outrageous. It's way too much money. But if I said, hey, here's, $10 million, go try to make $1,000 a week, you'd need one tick. You'd need one tick at a good at a big size risk, and you're like doing $1,000. It would be so consistent, right? You wouldn't need to blow your account every single trade and try to go for 100%. So I think not having enough money is the biggest or one of the biggest reasons. So what I'm trying to say is try to build good consistency first. And by building consistency, or the way to build consistency, excuse me, is not being scared to take the trades where you think might work and then allowing the take profit to be hit. But if your stop loss was so tight and you're just hoping that the trade goes there, but you don't want to be wrong, right? Now it goes against you and you're stopped out before it actually hits your target. So open up your stop loss. Don't risk as much. Build the consistency, build the habit, build the confidence in the strategy. And then over time, you can either reduce your stop loss or just increase your trade size and be saying, I'm getting a 80, 90% accuracy rate at like a half hour, right? Some people say, oh, you can't be profitable at a half hour or less than a one-to-one risk to reward. And like I'm proof you can, because I've traded strategies with a 3-to-1, or sorry, a 1-to-3. So like this trade here was going for 20 points and it's my stop loss is something like this. And I'm getting, 97, 98% accuracy. It's just absolutely crushing the market consistently. And that allows me to get a high enough win rate so that I can get consistent amount of clusters of trades. So this is important. So we're going to go into a little bit more talk of prop firms, and then I'll show you, the trade that you could have caught here. Actually, you know what? Let's just do that. So on the fold over here, right? We got a wick high, pulls back in, takes out this little wick high here. Sellers come in, buyers, sellers, buyers take the high here and then dump. And this digression right here, right? Telling the story of these candlesticks, you could just enter on the engulfing, stops above the high. And what you're doing is targeting not only this low, but you're looking to the left and I'm targeting another low, right? Simple as that, right? Price pushes up, down, up. Now we have buyers in control. Price pushes up, down, up, takes out this high, right? Drops aggressively, doesn't give you any engulfing, doesn't give you any reason to get into the trade unless you went into a lower time frame here, right? If you went to a lower time frame here, let's see if I can pull up my chart. What is this? 1129. Okay. Uh, Here. This is going to be on my top step. Look what happens. So, oops, bring to front here. This is that area right there, right? You see almost an inside bar here. Well, I think it is an inside bar. This is an inside bar because it's inside this candle. But you can see, look, sell to buy wicks. This candle closes. We have a sell here, right? To buy, right? So it's getting, or sorry, a buy to sell, pardon me, opposite. So we're getting a buy to sell price action in here. On a lower time frame, there are engulfings. You can see, look, price goes up, pulls back down. Price goes up, pushes back down, takes out the previous low here. This one candle followed by this move here is an engulfing, but we also get one candle here followed by two candles here that break the previous low. That's another engulfing on a different time frame, right? This is that was the 15 second that I was going to. Let's see if I can find something. Oh yeah, there we go. I just went one up on a time frame, and you can see exactly. See if you can see where you would enter on the engulfing. Right, here's the low you're targeting. Price pushes up, down, up, engulfing. Right, so your trade, you could enter there, stops above the high. Oops. There we go. Visual, bring it to the front. All right, there's your entry, right? And your stops are at this low here, but your also stops are a little bit lower because now, right, we're not only targeting this level, we had the reaction from this. Now price is folding over. So not only this low, I can look to the left here and target that low. So that's going to be your trade. Let's see if I can find it. Yes. Here's the trade. I guess I could have just shared my other screen. But here, price pushes up, pulls over. Here's your engulfing. You target this level. You get to target this one here. So now engulfing, stop loss, TP. Now you're almost at a 2-to-1. So your risk to reward, what is it? You need 26% or 28%. I forget what it is. I think it's 28. Not entirely sure, but that's the percentage of accuracy that you need to hit at a 2-to-1 risk to reward to be profitable, right? So you can't tell me that you can't hit those trades and be profitable. But okay, what I want to go to here just to finish off this video is I want to go over probabilities and how you can play the prop firm game. It all comes back to clusters of trades. So if your accuracy is high, right? Like I said, the amount of money that you want, if it's high, the number of trades that you're going to take is low, right? And opposite, if your percentage is high and your volume, you want to take a ton of trades because I want to just win, right? The amount of money that you're going to be risking and earning per trade is low. So say if you wanted to get a payout, right? Your threshold for most accounts, right, is about 2K because that's a $50,000 futures prop firm, right? At a 50K. This is your goal, right? And what I suggest is getting to this goal and then start taking out what's above that. It's just the safest thing to do. You allow yourself a more breathing room when you have this buffer instead of being like, I'm going to make $5 or $50 and then take out profits, or $1,000 and then take out 500. You don't leave yourself with much room as a buffer. So if I was trying to make $2,000 and each trade that I do is, say, $400. So every trade is going to take profit or TP $400. Every single SL is going to do or lose, say let's do 800 just for half R, right? Your risk to reward is 0.5 RR. right? That's so it's half R for this strategy. To reach your goal, you need 5 profitable trades in a row, right? To hit your goal. And so 1, 2, 3, 4, 5, right? And just for, sake of doing the video and trying to be as like honest as we can, let's try to do 10 trades. I think going larger is always is a good idea because then you could figure out your risk. You can figure out your risk is if you have data of the amount of wins that you have versus losses, you have the amount of money that you want to earn, and the amount of money that you have, you can build a risk parameters around that strategy. So if every single trade I do 400 and I lose 800 when I lose, and say the strategies, let's do 80%. Right. So out of 10 trades, there's going to be 2 losses. Don't know where they are. I'm randomizing them. Every other trade is going to be a winner. So we can do the math quickly. 400, 800, 1200 minus 800 here, right? So you have 400. Then you're at another 400, so 800, 1200. Then you're back to 800. Then you go up to, 1200. Now you go 400. And then you go 800, then you go 1200, then you go 1600. So this at a very base level, this strategy is profitable because you got 2 losses in here somewhere. If you have all the rest at $400 win, you have 4, 8, 12, 16, 20, 24, 28, 32. So you have $3,200 in wins and $1,600 in losses equals your 1,600. This is a profitable strategy. So if you can build your strategy and find a way to get 80%, right, with this risk to reward, you are profitable over time. If you can stick with this and the market respects it, right? That's the big thing, right? You want to take trades in as the market's ebbing and flowing because the market expands and contracts. Just the amount of money that comes into the market, it changes throughout the seasons. But if you can keep this, then you can start to scale. And now instead of $400, you can risk 4,000. And instead of 1,600, now your 10 days of trading is 16,000, right? You scale, you see how you can just scale. All you need is a plan that works and then just work the plan. But this idea here is if I want to get a payout, which is anything above $2,000, right? This week here, I got 4, 8, 12. I didn't reach 2,000 and then I took a loss. Well, you didn't hit it. Now you got this one, and then a loss. And you're like, oh man. And then all of a sudden you go up to 1,600. Perfect. You're getting close, right? I'm getting greedy. Now, to get a payout, if the next trade's a win, you're at 2,000. But that doesn't mean you can take a payout, right? You might want to recoup your costs of the actual prop firm challenge, right? Maybe it's $200. So you take out $200, right? You leave 1,800 in there. And then all of a sudden, maybe the next one's a win, then a loss. And then what happens if you have 2 losers here? This is very important in trading. If you go up here and you get a $200 payout, now your account's at 1,800. Now you get another win. So this now brings your account up to 2,200. And then you take $1,600 in losses, right? Does that throw you off and say the plan doesn't work? Or does it make you go on tilt? Does it make you be emotional? Does it make you over leverage? And then all of a sudden, the next trade may be a winner. But once you enter the trade, if you're going long, for example, here, here, right, and your strategy is something like this is going to be your $400 take profit. This is going to be your negative $800 loss. So you were at 2,200 and then you just took 1,822 and then you took $1,600 losses. So you have $600 available before your drawdown is hit, right? This $600 might push down, or the trade, sorry, it might push down like this before going to hit your take profit. If you adjust your risk and now you do 2 contracts, right? This is $800. This is negative 1,600. And the $600 that you just had, now you wiped out your account. Even though the trade went to hit a win, because your win rate is quite high. You can expect a win after especially having two losers back to back. The probability of having one loser, right, is 8 out of 10. The probability of having two losers back to back is not 8 out of 10. It's actually a lot less. Or sorry, 2 out of 10. It's a lot less than 2 out of 10. And then if you go loss, loss, and then if there's another loss, the next one, geez, if you're trading this strategy, right, that just makes me so much more excited. But probabilities are the biggest thing in the market. So if you change your risk on this trade to go two contracts, now you blew your account and you didn't allow the trade to run as it should in your strategy. And you just messed up the whole thing. You messed up all probabilities. So what you need to do is just allow yourself to believe in the strategy, breathe and meditate and pray if you have to, discuss the strategy with friends, get other people involved if you want to, trade the same strategy together, work on it, and then that'll allow yourself to believe a little bit more, and you might be more honest with other people and just say like, "Hey man, I'm getting a bit emotional, and I'm going on tilt a little bit," and they go, "No, no, no, just it's trade in the plan, just follow the plan, it'll work." And if it doesn't, right? You just say, okay, I have a strategy here. Maybe I didn't follow the plan here and I lost, right? Tomorrow's a new day. The next trade is a new trade. Every single instance in the market is slightly different. And we just need to believe that if we can build a strategy and follow it, the money will flow. And there's many, many, many people that are making money right now. So you just need to believe in the plan that you create. And the idea of following what I'm instructing you in the market is very straightforward. The 50% love to get hit, right? Here's the high and low of Asia. Here's 50%, right? The low gets taken out, London here, the low and the high, low and the high. And look, here's the 50, right? The 50s love to get hit. The 50 loves to get hit. The lows love to get taken out. So the strategy is adaptable, right? Every market likes to work in a very, very similar fashion. We go to Bitcoin, you go to crypto, you go to stocks, you go to Forex. I came from Forex. I went to futures because I like the prop firms, but you just need to build something that works, build consistency, build faith, and just repeat it, rinse and repeat, rinse and repeat. I'm going to shut off the video here. If you guys have any more questions, let me know. I know I went on a little bit of a tangent here. This video might be a little bit long. Believe that I know that I'm just ranting every once in a while, and there's no set topics for each video. So I'm just ranting and just trying to figure out what's going on in mind, what do I see, and yeah, check this out. So this low here was actually New York low. So that's beautiful. Reaction, enter, failure, right? Reaction, enter, failure. Reaction, enter, failure. Believe in yourself. Have a wonderful weekend, and we'll chat with you guys again soon on another day. Peace.